JB Cycles with an update on October the 9th. Here's my cycle chart, and right now we have finished the most bullish part of this 4-week cycle. So I have kind of a neutral bias for the coming week before the cycle gets really bearish. So I could see a couple of, well, say many different scenarios here. We could either have some more downside early next week, then a swing up making a lower low, and then the really bearish part of this cycle takes over and we go down to my, well, I have kind of a target around 3,400, but it may be something different. I'll maybe come back to that in another video later today. I could also see a more complex, call it a big bear flag here, perhaps going into the next 4-week cycle before we turn down into my target area and do this breakdown of the June lows. So it could play out in different ways, but as you know, we have broken this 80-week offset, and the consequence of that could be that we have triggered a target around 3,000 in the S&P, but we don't have to go there the coming 4 weeks or so, or 4 to 6 weeks. Anyway, we have the 40-week cycle is making a low here around November, but if you look at my 7-year cycle in red, it really doesn't care about this short cycle here. You know, normally you see like back here, the 40-week cycle has a low and the 7-year cycle has a low. Here you kind of see a low, and there and here and there. Often you see these 40-week lows also in the 7-year cycle, and you should, because the 7-year cycle is 9 of these 40-week cycles. Anyway, the 7-year cycle really doesn't care much about this 40-week cycle going up here into Christmas and January, maybe February. So yeah, it could be a risky period all the way into March, April here. That could be the final low, but we also have a possibility for after the summer in next year, going all the way actually into the fall, October and so on. But yeah. Anyway, cycle is still pointing down, by both cycles. So let's have a look at the hourly chart. So it's kind of messy here today. I have illustrated my 4-week cycle here in yellow, and although my wavelets are not able to pick it up, I'm very familiar to an 11-day swing or oscillation from the Norwegian market, and we can see it very well here in the Dow Jones Industrial in orange, and also what I'm mostly using here for the Dow Jones is the purple 6-day swing indicator. So you could say, well, 4 weeks is about 20 trading days, so shouldn't this be 10 days, perhaps the half, and perhaps this should be 5, half of this one again? No, actually my experience here is, well, often you have 2 of these in one 4-week cycle, or you have 3 of these, so you don't have a harmonic here. It's a kind of a fight of dominance. Is it the 10-11 trading day swing that is dominant, or is it the shorter 6 trading day swing? And you can have a combination of these. You could have 1 of these in a 4-week cycle and 2 of these. But over time you get an average here. So yeah, it's complicated. But if you look a bit back in time here, well, a lot of mess going on here. But if you focus on the orange one here, that's about the 10-11 trading day oscillation. So you have here a very right translated one and then a very left translated one, and that's what I call a merging oscillation or cycle. And you see this one clearly, this one very bullish, this one very bullish. You can see this one and this one and this one and this one. So we are here now, and we are just we are not that long into this 10-11 trading day oscillation. So if that one is dominant, we could easily go down for another couple of days here, drawn with this red scenario. And we could, try to make a double low here or break below it, and then have a dead cat bounce here before we crash. I call it crash, but it's not like a crash. It's down 4 or 5%, perhaps, but not like 30%. Or if this short to 6 trading day oscillation is dominant, we could pop up quickly on Monday, trying to make kind of a bear flag formation here, but then the bearish phase of my cycle should take over, bringing us down, perhaps with an A, B, C move to make this low over here in the end of October. I really don't know. If I had a short position here, I'm not trading the US markets. This is now a hobby for me. I'm not a trader, but I do on occasion take some positions, but then in the Norwegian market. But if I was short here, I would kind of look for covering it on Monday, because that's the easy downside in this swing. We could easily drop much more, but when you get to this point, it's much more risky. You could pop up here and get squeezed. So don't get too greedy and want all this downside. So I would probably look for cover on Monday, and then I would, if I was considering going long, I would perhaps wait one day more or something to see if actually the low is in. But as I said, we could easily drop. Well, if we go back in time here, we are kind of an analog is about this point and about this point. So here, well, compared to now, here we dropped another 1-2 days, and here we dropped another 1-2 days. So yeah, we could easily drop Monday, Tuesday here, trying to make a double low or breaking below. So it's not a very bearish part of my cycle, although when you look at my cycle in orange here, actually it is kind of pointing down early next week, and then it's going a bit up again. So overall next week is kind of down, up, and mostly sideways. But I could easily see us going down Monday, Tuesday. I am rather bearish. So then I do expect, call it surprises coming to the downside. But if we just break down to lower lows here, this 4-week cycle would look more or less exactly the same as this one and as this one. And I don't like when patterns repeat too much, because then you start to think, oh, this is easy, you do the same thing every time, and then you get crushed by the market does something completely different. So my intuition says, or I would like to see a break of this pattern before we continue the downside, but who knows. Okay, I'll make another video later today on a follow-up to the historic bear markets, and looking for downside projections, and yeah, see you on the next one.